I've been saying this for a long time. Inflation is falling. Rates were at 5.5%, then out 5%. Inflation, headline inflation is at 2.5%. Half the people on the internet is like, oh my God, inflation's so high. It's 2.5% and it's falling. Just to show why it matters, this is the banana zone. I posted this on Twitter. Global M2, 10-week lead over Bitcoin. Do you need anything better than that? Oh, wait, I can give you something better than that. I can give you the GMI total liquidity, which is both private sector and state sector liquidity versus Bitcoin. It says the banana zone is here. That's the only thing I can think of, is that everything I look at says the banana zone is here. Bitcoin seasonality, election years, October, up only. Right? And these are big moves.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal on the most chaotic show in macro and crypto. It's time for Raoul to follow the Jade Powell rates announcement. Raoul discusses crypto, the banana zone, the everything code, lifestyle chips, and where we are today in the big picture outlook.
This is the chart of CPI versus the large outbursts of inflation, the 5 largest from the 1940s and 1980s. This Mount Fuji pattern is so consistent, yet everybody bleats, oh, well, if they cut rates, they're going to bring inflation back. No, they're not. They never have. Inflation will come at the end of the cycle. This is so normal. Inflation is going to keep falling. It'll be below 2%. And guess what? I think rates are coming below 2%, and people don't understand this yet. And so I think rates will continue to be cut. The market doesn't understand this. Rates are part of financial conditions that should continue to improve. In fact, do I have a financial conditions chart on? I've stolen Julian's charts from our Exponential Age Asset Management investment committee meeting this morning. That one's basically the rate of change of interest rates versus the ISM survey. Don't tell Julian I'm doing this. He'll get pissed off because I'm using his charts. But our GMI model, it shows that ISM, the business cycle's all about to pick up. All the talk about recession and everything is just utter nonsense. We've actually got economic growth signposted everywhere whilst inflation is falling. So that's the big story. So the Fed, blah, 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 blah. But generally speaking, risk assets should be doing really well. And risk assets are doing really well because guess what? As I've talked about, bleated about, explained to you in the Everything Code is global liquidity. This is the time. They have to roll the debts. Global liquidity is going to go up. And hey presto, it's going up just like it did every other time. So that's global M2. We can use GMI weekly global liquidity, which is just central bank orientated. Less exciting yet. When we get to the Chinese, their assets, their balance sheet in white, that's cyclical. It will continue to grow. They will probably do a lot of quantitative easing. But generally speaking, overall, the GMI total liquidity index breaking out.
Bitcoin sought to flip $62,000 to support on September 19 as markets digested a rare 0.5% interest rate cut by the United States Federal Reserve. Followed continued BTC price strength during the Asia trading session. Local highs of $62,600 followed the Fed's move, which was only the third time in history that a rate-cutting cycle had begun with a 0.5% reduction. These, in turn, liquidated short BTC positions across exchange order books. Data from monitoring resource CoinGlass put the total for the 24 hours to the time of writing at $128 million. Now we need to reduce leverage or take profits, it told followers on X in subsequent analysis, warning them not to get carried away. BTC price prediction calling for $64,000 in the event of a 0.5% cut. This ultimately proving too much for bulls to muster as significant resistance lingered overhead. Bitcoin slowly eating its way through the resistance level, Popular Trader Gel reported on X. Above $62,500, things will look a lot more constructive, and stops above $65,000 won't be safe anymore. Going to be an interesting end to September. The US dollar saw volatile conditions, meanwhile, with the US dollar index initially also rising before giving up its gains to return to prior support. Sitting at the edge of support, breakdown can result in a sharp move towards 96. Popular trader Axel Kibar responded in his latest DXY analysis on X.
The banana zone. Now, I'm wearing my banana zone t-shirt because I think it's coming. I think it's coming in days or maybe a week. And before I said, well, maybe it's next month, maybe it's the month after, maybe it's this week, I don't know. I'm like, no. Julian and I in Global Macro Investor, which is the flagship research service. If you haven't checked it out, go to globalmacroinvestor.com, have a look, see what we do from there. That's where we do the deep work. I think we do more macro crypto work than anybody else in the world, and I think our macro work is the best in the world as well. And we've done thousands of hours on this. And I know it sounds hubristic, but I honestly give this banana zone an 80-something% chance of happening almost immediately. Give it 2 weeks, within 2 weeks. And I know that sticking my neck out and wearing my banana zone t-shirt, I'm trying not to jinx the thing. But, as I've talked about, all of our hopes and dreams are in this. Mine too. Real Vision as a business. Almost everybody I speak to, I've been on the phone with a few, billionaire GMI subscribers, friends of mine. Everybody wants this to happen. Everyone needs this to happen because people are invested. Now, technology, there's a bunch of other ways of skinning this cat. But really, people have been like this with high interest rates, a slow business cycle where ISM has been bumping along. And I know people like a lot of, people on Twitter are like, oh, my God, the markets are all-time high. What's everybody complaining about? Speak to real fucking people when their mortgages are like that, their interest payments are like that, their credit card bills are like that. Speak to corporations who are trying to borrow money that aren't kind of, AAA-rated tech companies that have no debt. All of this stuff. It has been very, very difficult for a while. Rates have been the highest they have for a very long time. The rate of change of interest rates was enormous. Inflation is now wildly below interest rates. So real rates are ridiculously restrictive. And people feel it. People are not happy. People don't have personal expenditure abilities to do what they want. But it's coming. It's coming. The business cycle's changing. So all of you who run businesses, all of you who see the sluggishness of the cycle and wonder why the equity market's going to all-time highs and your business isn't yet, it's all going to come. Things are going to improve dramatically. The equity market's driven by liquidity. Your earnings, yours and mine, are driven by the business cycle. And that is just about to pick up. So cheers. Here's to a much, much better 18 months ahead.
For Arthur Hayes, former CEO of crypto exchange Bitmain EX, attention was now on the Bank of Japan's own rates decision due on September 20. The strength of the yen would, in turn, influence BTC price performance, he suggested. Something doesn't add up. Zooming out, however, trading resource the Kobayashi letter had a clear warning for risk asset traders. While seemingly boosting liquidity, rate-cutting cycles, beginning with a 0.5% decrease, ultimately result in losses for U.S. equities. In 2001, the market fell 31% after 2 years, and in 2007, the market fell 26% after 2 years. These were major crises, part of an X thread recalled. Kobayashi contrasted the Fed's upbeat message with the scale of its policy dial-back, suggesting a contradiction in play. If the Fed has only started with 50 basis point rate cuts during crisis, why start with 50 apps this time? It queried. The Fed continues to say the economy is strong and they are calling for a soft landing. But policy decisions are as if we are in a crisis. Something doesn't add up here. Data from CME Group's FedWatch tool showed odds of another 0.5% cut being less likely than a smaller 0.25% follow-up at the Fed's next meeting on November 7. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.